qualifying relative is your backup route. You only go here after the person fails qualifying child. On the EA exam, they love that sequencing. If someone is a qualifying child of any taxpayer, they cannot be your qualifying relative. Even if nobody actually claims them, the fact they qualify for someone else blocks the QR path. Test 2 is relationship or member of household. If they're not related, they must live with you all year. But if they're on the IRS listed relatives list, like parent, sibling, child, niece or nephew, or in-laws, they don't have to live with you. One weird exception: you can't claim your housekeeper or other household employee, even if they live with you. Here's a favorite exam twist: in-law relationships don't end. Divorce or death doesn't break the relationship for dependency purposes. So a mother-in-law can stay your mother-in-law even after divorce or after your spouse dies. That comes straight from the regs, and it's exactly the kind of absurd but true rule they test. Test 3 is the gross income test. A qualifying relative's gross income must be less than the deemed exemption amount, 5,050 for 2024. Gross income here means taxable income, money, property, or services that aren't tax exempt. Key exam tip: there is no gross income test for a qualifying child. This test exists only for qualifying relatives. Test 4 is support, and it's different from the qualifying child support test. For a qualifying relative, you must provide more than 50% of the person's total support. Support includes basics like food, shelter, education, and medical care, and you can include the fair market value of lodging you provide. Also, amounts from Social Security or welfare count as support, just not provided by you. If no one person pays over half, you may have a multiple support agreement. The group of qualifying family members must provide over 50% total, and the person claiming must provide more than 10%. That claimant files Form 2120, and the other contributors sign statements agreeing not to claim that year. Only one person claims the dependent per year, but you can rotate in different years. Now, Form 8332. This is for divorced or separated parents when the custodial parent releases the claim so the non-custodial parent can claim the child. It's an exception to the normal residency rule for claiming the child as a dependent and for the child tax credit, but it does not transfer head of household or EITC. On the exam, that limitation is the trap. According to the IRS, which factor does not weigh in favor of the IRS approving equitable relief? The choices include abuse by a spouse or former spouse, poor mental or physical health when the return was signed or relief was requested, the taxpayer still living with the spouse, or none of the above. Think about it. The correct answer is the taxpayer requesting relief still living with his or her spouse. Living together is generally an unfavorable factor, not a favorable one. A tempting wrong choice is poor mental or physical health, because it sounds subjective, but the IRS treats that as a factor that can support granting relief. To claim the child tax credit, the child must have an SSN that's valid for employment and issued before when? Your options include at birth, by the end of the tax year, by the due date of the return including extensions, or by the due date not including extensions. Think about it. The correct answer is by the due date of the return, including extensions. That's the timing rule for the child tax credit SSN requirement. The tempting wrong answer is the due date without extensions, because many deadlines ignore extensions, but this one explicitly includes them.